extended payment terms that are typical for the con industry, resulting in a longer collection period and slower cash inflows as compared to our current turnover. As a result, approximately $1.5 million is included in long-term accounts receivable at December 31st, 2015, for the revenue that was recognized during the prior fiscal quarter ended September 30th. Full payment of these receivables is expected within 12 months from now. The increase in our revenue for the quarter ended December 31st, 2015, as compared to the quarter ended December 31st, 2014, was primarily from an increase in revenue attributable to DNA manufacturing for the diagnostic market of approximately $242,000 related to the Vandalia asset purchase, an increase of approximately $55,000 from 2 government contract awards, as well as an increase in consumer asset marking sales of $60,000. These increases were partially offset by a decrease in revenue from suppliers of the DLA due to the consolidation of our individual contracts to one contract directly with the DLA, as we have disclosed previously, as well as other decreases to military customers, for a total decrease in military and government of approximately $200,000 and a decrease of approximately $81,000 related to industrial materials. Operating expenses were $4.2 million, a decrease of $815,000 or 16% from $5.1 million for the same period in the prior fiscal year. This decrease is attributable to a decrease in selling, general, and administrative expenses of $1.1 million, offset by increases in research and development of $194,000 and depreciation and amortization expenses of $109,000. The decrease in SG&A is attributable to a decrease in non-cash stock-based compensation expense of approximately $1.6 million, primarily associated with grants to employees during the quarter ended December 31st, 2015, having a 4-year vesting period, whereas the grant to employees during the same period in the prior fiscal year vested immediately. The decrease in stock-based compensation was partially offset by increases in accounting and legal fees of approximately $113,000 and $129,000 respectively, as well as an increase in payroll expenses of $120,000. Research and development expenses increased to approximately $472,000 for the 3-month period ended December 31st, 2015, from $278,000 for the 3-month period ended December 31st, 2014. This represents an increase of $194,000 or 70%. This increase is primarily due to development costs incurred in relation to the 2 government contracts, as well as an increase in other laboratory supplies and materials. The increase in depreciation and amortization of $109,000 for the quarter ended December 31st, 2015, as compared to the quarter ended December 31st, 2014, is primarily attributable to $69,000 of amortized customer purchase orders acquired as part of the asset purchase agreement with Vandalia that were fulfilled by the company during the first quarter of fiscal 2016. The remaining increase relates to amortization expense for customer relationships and technology also purchased from Vandalia during September 2015. For the first fiscal quarter of 2016, adjusted EBITDA was a negative $2.2 million compared to a negative $1.7 million for the same quarter last year, and a decrease over the positive $213,000 in the prior fiscal quarter, due mainly to a number of non-recurring expenses incurred during this past fiscal quarter. Turning to the balance sheet, cash and cash equivalents totaled $12.4 million at December 31st, compared with $7.3 million at September 30th, 2015. The increased cash balance is as a result of the registered direct public offering and concurrent private placement we closed on November 25th that raised gross proceeds of approximately $8.75 million, which we discussed in more detail last quarter. Net proceeds from this offering, after deducting the placement agent fees and offering expenses, were approximately $7.9 million. As of December 31st, our average cash burn rate for the fiscal quarter was approximately $964,000, compared to approximately $864,000 for the same period in the prior fiscal year, and $619,000 for the fourth quarter of fiscal 2015. The increased burn rate for this past quarter is primarily due to the extended payment terms for our cotton customers, as well as certain non-recurring expenses mentioned above. We continue to closely monitor our spending while ensuring that we have the capacity and expertise to meet our most immediate market needs, and that we are preparing for the needs of our customers in the near future. This also means that we are and will continue doing some strategic hiring and are beginning to incur other costs to support our growth. We intend to remain disciplined in our spending and seek to strategically manage costs in line with our current and near future market opportunities. We expect to finance operations primarily through cash flows provided by operating activities, provided that we achieve a sufficient level of future revenues. We estimate that our cash and cash equivalents are sufficient to fund operations for at least the next 12 months. Thank you for joining us today, and I would now like to turn it over to Jim for his comments.
Well, thank you, Beth, and thank you everyone for joining our call today. I'll begin with a quick review of our strategic goals for last year, which I reviewed with you last quarter. Each of these goals was achieved with a high degree of success that will drive our performance in fiscal 2016 and keep us on a high growth rate as we demonstrated last year. With our core technology solid, we see last year as the playbook to linking our vertical market solution offerings and domain knowledge with our horizontal products in our core markets as catalysts for growth. Now, as to our strategic goals for 2016. To achieve growth this year, we are expanding our sales force in key verticals. Today, we announced the formation of a strategic advisory board that will provide guidance in specific market verticals. Initially, the SAB will be comprised of 2 former executives with decades of experience in the pharmaceutical field who will assist the company in its entry into the pharmaceutical industry, and a globally recognized leader of energy utilities who will guide the company's expansion into the protection of the critical infrastructure in power grids and railways. We will support our sales effort with an enhanced marketing plan, consistent with our business plan for 2016, which was developed under the watchful eyes of Judy Mara, our Chief Information Officer. We produced a comprehensive demand creation plan that has 3 core pillars. Thought leadership, as represented by the formation of our strategic advisory board, lead generation, and sales enablement. This framework will drive revenue, nurture our opportunities, and accelerate our leads. Our programs will be highly targeted, integrated across all our communication channels, and will support our selling efforts in these core markets. With the opportunities for our technology seemingly endless, we have made tough decisions on our focus and our channel strategies in order to align our resources against the areas where we see the fastest and largest growth. Although early stage, we are a growth company, and as opportunities mature, we must narrow our aperture and let the largest and fastest opportunities subsume our working assets. Now, this is typical for an early stage growth company and has always been our strategy. Our goal is to obtain larger contracts with larger customers and with longer terms. These goals have already taken root in textile and military and government verticals. with a larger revenue base and more of it coming via predictable contracts and less via purchase order, we can more readily forecast our business, invest in our growth with budgets that are gated by income, and better ensure our profit goals. We've gained significant benefit from our military contract business for product realization that links our signature and digital DNA solutions. Commercialization efforts are underway in high-volume electronics, the marking of elastomers and other industrial materials, and high-speed inkjet printing. And we are being steadily vetted for additional work with federal agencies with whom we are currently working, now 6 in number. Our asset marking, which touches consumers' lives and well-being, is a close embodiment of our brand motto, keeping life real and safe. Our soon-to-launch DNA security initiative with SMR, who are also known as Security Marking Resources of California, will access 500 U.S. security dealers who collectively service over 500,000 commercial and consumer customers. The company's asset protection program has advanced westward from our Long Island headquarters to inclusion in 4 states, over 250 communities, and over 100 law enforcement agencies. Future sales in these regions will also be supported by our relationship with SMR. This is a perfect channel selling force for us, as the firm maintains relations with law enforcement agencies and with security firms. Their very well-produced videos help us gain mindshare quickly and allow us to train police and security installers quickly in any location and do it remotely. Now, our forensic value stands above all other security markers, evinced in our military applications and a 100% conviction rate in European ATM cash thefts. Our performance has attracted the attention of governments, insurers, auto manufacturers, and car owner associations. Our focus on supply chain risk management has produced incredible yield. That's a term borrowed from our cotton allies in textiles. Our partner, Louis Dreyfus Commodities, has recruited more farmers to long-term commitments to DNA marking because the farmers want to be sure they and their cotton remain the icons of quality. In addition to Costco, more brands and retailers are committing to DNA-authenticated origins and quality. But beyond assuring label content for the types of fibers used in garments and home goods, our DNA platform can be used to answer the social and ethical questions on the mouths of today's consumers, such as, where does this stuff come from? Does it conform with my expectations for ethical conduct and social responsibility? Is it organic? Is it sustainably grown? These questions are now embedded in the DNA of a culture questioning global commerce. Their answers are demanded by consumers of the brands they buy, and the brands are turning to our company for answers. We have expanded our fiber typing business to a global marketplace. New customers include luxury European men's and women's apparel, top denim lines, outdoor and performance sportswear and apparel lines, and boutique and large retailers of premium cotton products. These customers use fiber typing to diagnose if they have a problem in their supply chain, whether the opportunity to solve the problem by using signature DNA tagging to ensure traceability from point of origin to point of sale. So the fiber typing actually leads to an incremental sales base in signature tea. The forces of label compliance, ethical consumerism, and responsible sourcing are driving brands for technologies that they can trust, and they trust DNA. Consequently, we expect the businesses that take on signature tea to continue as our customers, and we expect our cotton business this year to build upon our performance of last year. On January 12th, the company announced that it had signed a cooperative research and development agreement, the so-called CRADA, with the United States Department of Agriculture. The agreement will enhance Applied DNA's science's identification of cotton cultivars, including the ability to identify key cultivars from specific cotton growing regions, including those with questionable labor practices. Our platform will enable the discrimination of cotton sources by country. Because of child labor issues, shareholder resolutions have been passed by the owners of Target and Costco that forbid the use of cotton from Uzbekistan. Now, paper trails will not suffice, but we will be in a unique position to help manufacturers comply with these and similar demands for ethical sourcing. And the last vertical I will comment on today is plastics. We have successfully completed pilots with Borealis, Tecmer, and others. And right now we are in pre-commercial stages, examining issues of scale and supply chain control. Our position is unique and the addressable markets very, very large. We feel these markets could be important to us as natural textiles, and we anticipate that this business will begin this fiscal year. In sum, our roadmap is clear and our goals attainable. Our allies are strong and getting stronger. We look forward to growth in our core markets with robust consumers. And now, operator, can you open the line for questions?
Yes, sir. We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then 2. And our first question comes from Brian Kinstlinger of Maxim Group. Please go ahead.
Hi, good evening. How are you?
Very well, thank you. And you, Brian?
Great. So I'm wondering, as we head into just the beginning of the year, but we're always looking at the back end of the year since it'll be seasonally strongest for you, how much visibility do you have on cotton orders and how they're shaping up for the second half of the year? Do your customers give you a sense of how much they're going to order, and if so, can you give us sort of a sense for how much more you might expect to deliver this year?
Sure. Well, remember, our customer, our partner in the business, is Louis Dreyfus. And Louis Dreyfus is the one who buys and sells the cotton. They also purchase our DNA. Our other partner, Himatsinka, is the one who is at the exact opposite end of the selling trail. And that is, they have direct contact with most customers, although a few customers do contact Louis Dreyfus. What we do know is that we have the attention of many, many brands, and that those brands are expressing strong interest in placing orders. Of course, the orders are not placed directly with us. The orders are placed with Himatsinka and with Louis Dreyfus, who cause an order to be placed with us. So all of that said, our expectations are that our performance last year is the baseline from which we start this year, and that we can expect to see additional incremental business that appears from this distance to be quite strong. So we're bullish on the sale of cotton, but really can't say much about the quantity.
So then, I think it's out that Costco is a customer. You have it on your kind of on that piece that you had before the conference call. So with Costco out buying and now selling authenticated marked cotton or textiles, are you seeing other customers feel the need to speed up the sales process in order to get competitive, or has that not sort of kicked in yet for Costco's competitors?
Well, I really can't speak to the sense of competition between Costco and others in the marketplace. Costco really occupies a very unique position with their membership model. I can tell you that the attention is there, as witnessed by the NPR segment that aired yesterday. We see the interest coming from the consumer face, as well as from the retailers and from the brands. I wouldn't say it is a competitive race to the market at this stage, but I can tell you that the brands are very concerned about the security of their supply chains. And what they want to deliver is pure, ethically resourced product.
Great. One more on the textile/cotton supply chain. In fiscal 2015, when you had your order, and even through now, your supply chain wasn't fully set up. I think you talked about increased adoption of your technology. I guess I'm curious, in fiscal 16, as you receive the orders for cotton, as your partners do as well, how much more of the revenue do you think you'll be able to collect, given the supply chain will be more built out? And will it be fully built out, or at least significantly more built out this time around?
That's a great question. And you may recollect in our last investor call, we discussed the issue of the company's maturation from being a product-based company. We made, designed, and sold DNA, to being a process-based company. We had to inspect and correct conditions in the supply chain to make sure that the DNA marked components in the supply chain were as effective as they could be. And then we evolved also to include systems. Systems for the DNA marking at scale, systems for the DNA authentication remotely or at our facilities. And that development of process, of system, is marked really an evolutionary step for the company. Signature DNA is a system, it's not just a molecule. And so as we implement with more brands, and those brands have additional supply chains, they're not all using the same spinners, of course, they're not all using the same weavers. We have to onboard those locations, write the SOPs, train them, inspect them, audit them throughout the course of the year. So we have a certain responsibility that goes beyond the biotech component, but really what makes us a company is the fact that this is a system. And so we're busy now strengthening those systems, implementing them, and building the team that will maintain the security of those systems throughout the year.
Great. One last question I've got is, you highlighted Borealis, and I thought you said in conjunction, I thought you said with Techmer, that you have now are moving into commercializing that process or that customer. So maybe, if that's right, highlight how you expect to see maybe revenue trickle through the income statement. Are we a quarter away or two away from seeing the first bits of revenue, and when might we see it be meaningful, similar to, maybe compared to the process of textiles, please? Thank you.
Sure. Plastics, of course, are different than textiles, and the introduction of DNA into the large-scale manufacture takes place in a different manner altogether. Now, that's been largely already worked out, but not yet performed at scale, and that's the goal before us. Our expectation is that before the fiscal year is up, we'll see some impact from the commercial scale implementation of our plastics business with one or another of the several partners we have in the category.
Thank you.
You're welcome.
And our next question comes from Rob Stone of Cowen and Company. Please go ahead.
Hi, I wanted to ask you sort of a strategic question. I thought your remarks at the beginning, the Strategic Advisory Board and so forth, and winnowing these opportunities were very good. How do you think about, for instance, a pretty granular approach to things like enabling asset marking, community by community with law enforcement, et cetera, or working with some of these other lower volume opportunities versus mass manufacturing of textiles and synthetic fibers and so forth? How do you balance those?
Sure. Even the production of mass quantities of DNA to mark textiles began at a smaller level. Now, our view of the consumer market is that it's massive and that the opportunity is entirely scalable, and we're preparing to do exactly that. We've not really begun a formal launch into that market, and that won't take place until closer till the end of this month. But when that happens, our expectation is that this is just as scalable, both from a revenue point of view and a social impact point of view. We think it'll have an impact on crime. We think it will have an impact on return of assets. We think it will have an impact on the insurance industry and their annual payouts. So although it may not be quite as scalable, because if it comes to consumers, you're selling them one consumer at a time. But we have a lot of them. So we do think it's very scalable, both in Europe, the UK, and the US.
But I guess that's going to depend relatively more heavily on channel partners?
Absolutely. That's the model we want to take to the market. So dialogue with insurance companies, dialogue with groups of automotive owners, dialogue with communities, all hinge on having discrete channels to get to those markets. The value of SMR is that they're really a coast-to-coast training facility, so they have the capacity to remotely train police. There are 12,000 police departments in the U.S. As kind of a trial, we began by foot alone, the movement of this platform westward from Long Island all the way to Pittsburgh. We were struck by the enthusiastic uptake by the chiefs of police. It really spread by word of mouth from community to community via the chiefs of police because they were so impressed with its potential. Now, having done that kind of grassroots groundwork, we're ready. You can call that our focus test. We're ready for addressing a mass market and for doing a pan-US launch.
So in terms of modeling that or pricing it, is this, a parallel example might be in vehicles, for instance, where if you put a retrieval system on your new car, you get that value back in lower cost for your auto insurance. Is this something where consumers in the end are going to essentially break even on insurance costs, or who's adding the value, I guess, and ultimately paying you?
Yes, it's a matter of evolution, I think. I think initially the benefit will inure to the consumer, who can sleep more confidently knowing that their marks are returnable, that they won't reside in a police storage room for years awaiting identification. But beyond that, that's just the tip of the iceberg. Beyond that is the deterrence of the crime itself, which we think will be extraordinarily impactful socially and on communities, and that's just what we've seen in large-scale deployment in the UK, in Sweden, and in Denmark. Now, following that, as has already happened in Sweden, once it was demonstrated as a viable concept and that the law enforcement agencies supported it, the insurance companies stepped right up, and now we have the largest insurer in Scandinavia supporting the program and using it, in fact, to deter the rate of theft of BMWs as they're imported from Germany to Sweden. So I said that I thought it was a process of evolution. I think it's benefits that will be realized first by the consumer, ultimately by the police, and finally by the insurance company, who should have fewer crimes to deal with, and when they do, lower payouts.
Great. My next question has to do with also keying off the advisory board. Could you elaborate a little bit on how you see the specific application and opportunity in power and other critical infrastructure? How's your technology going to be there?
Oh, sure. Well, we already, for example, have a contract through a sales channel with with an electrical distributor in Sweden who supplies virtually 50% of the power. And the purpose there is to protect the infrastructure. Now, the FBI regards threat to the U.S. infrastructure as terrorism. And that can be as small as, a pickup truck tying a rope to a copper line visible at a railway station and pulling the copper line out, given the cost of copper and the ease with which it's recycled and the anonymity of those transactions. Well, we remove the anonymity by using DNA. So it's an opportunity to protect the infrastructure of these power distributors, of these energy utilities. And so we've brought on someone who's globally recognized. We'll have more to say about this tomorrow. Who's globally recognized, who has access to energy authorities in the United States and in Europe, and who finds the concept very compelling. And this is a person who's chaired large boards, who has a high degree of influence and is a wonderful mentor, and will be able to help our business vertical head within the company develop that business.
Great. My last question has to do with just sort of a budgetary question. You talked about expanding the sales force in key verticals, and I know there are some puts and takes on the run rate of expenses because of one-time items. But how should we think about the size of the incremental investment that you expect to make in particularly sales and marketing?
Well, what we intend to do, as Beth described, is utilize a gated budget to the growth of our sales force. We've spent a number of years and a large amount of money developing our intellectual property and productizing that and preparing for the market. Now our turrets need to be turned toward sales, and that's the most important area to develop in the company right now. How quickly we develop it is a function of the opportunity. And, so we will use a gated method. I don't know, Beth, if you want to add any more to that?
No, I think that was insightful. And just to back up the gated budget and the strategic plan, we also have a detailed forecast and projection modeling out our expenses and them in line with revenue.
I wonder if that could translate to roughly, headcount at the end of fiscal 15 versus where you think it'll be at the end of this year, something like that.
I see us hiring 5 or perhaps 6 key sales individuals over the course of the year. We have already begun to add to those sales staff. So far we have 3 on, but we are determined to hire only the best, and so we're being very, very careful about those positions.
Great, thank you.
You're welcome.
And our next question comes from Josh Seedy of Maxim Group. Please go ahead.
Hi, thanks for taking the questions. I guess firstly, would you mind helping us quantify the number of large pilots that you have that are ongoing, and maybe share the progress or notable feedback that you're receiving?
Sure. We have operated under a kind of informal model for the last 2 years of managing about a dozen. That's about the right burden for the size staff we have. And those are significant pilots that require some significant development. And we look to close those pilots in a period of 3 to 6 months, and we also look to get them financed by our partner in that case. And so we have kind of stayed at roughly that level. I would consider that healthy. That's not all that constitutes our pipeline. However, once we have closed on a particular pilot, even if it's not a current one, of course it remains in our corporate memory and it becomes a clonable event. We can repeat it with the next similar application that comes along.
I appreciate it, thanks. And also, would you mind elaborating a bit on the size of the opportunity in pharmaceuticals, and maybe specifically in terms of 2016, and what could be, if it could be recognized in revenue, you think, in that time frame, or if it's something that will be more longer term? Thanks.
Sure. Well, as you can imagine, the total addressable market is huge. It is an industry that is afflicted by a high rate of diversion and a high rate of counterfeiting. But that yields results measured only in dollars. And this is an area where the results will be measured in lives saved as well, and in accidents avoided. Hundreds of thousands of people died last year in Africa as a consequence of counterfeit drugs. And our desire as a company is to have both kinds of impact. We want to do well and do good at the same time. And we're certain that pharmaceutics is that market. So I wouldn't want to put a cap on the size of the total addressable market. It's, of course, many billions. It's one of the largest single counterfeited categories out of a $1.8 trillion counterfeit economy. There are also significant barriers to entry. We think we've already encountered those barriers and begun to clear them, and so we think that our possible time to deployment is actually quite short. And so it's a matter of finding the right partner, getting through a successful pilot, and commercializing. But our experience in cotton, our experience in plastic, and the production of DNA and its implementation will help us enormously there.
Right, thank you. And also, I'm curious if the federal government is any closer to having APDN mark and authenticate any additional items or components?
Yes, they are. We have 2 federal contracts, one with the Office of the Secretary of Defense and one with the Missile Defense Agency. And both of those are contracts meant to facilitate commercialization. And so we are steadily examining new opportunities, new outlets for our DNA marking, and everything ranging from bearings to seals, gaskets, to electronic components, to wiring rigs, et cetera, et cetera.
Great, thanks. And lastly, can we just, or would you mind going over just directionally how we think about the next quarter in terms of seasonality and maybe how that will play out on a go-forward basis for the rest of the year?
Yeah, I think we will, as we predicted in Q4, we will be impacted by seasonality, I think, quite strongly this year. We are doing all that we can to smooth that out both this year and for the following year. I think it'll be smoothed out by virtue of experience alone, but by other incremental incomes. Don't forget the seasonality is for DNA supply, whereas DNA authentication on those products takes place throughout the year. There are other businesses we have which are not seasonal, and so I think we'll begin to see the spike smooth out. But I expect that this year will show some strong impacts of seasonality.
Great, thank you.
You're welcome.
And our next question comes from Ken Walk of the Benchmark Company. Please go ahead.
Hello. I guess I have some questions. Actually, just trying to get a handle on what the revenues are likely to be next year, where they're going to come from. So my first question is, you mentioned that you're trying to move from purchase orders to contracts. How many purchase orders do you have now? How many contracts, and what's your expectation for the number of contracts by the end of the year, fiscal year?
Right. Well, the bulk of our business has been in the form of purchase orders. We do have contracts with some key accounts that we manage very closely, and we're looking to increase those by a multiple. I would rather not give an accounting of the simple number, but to say that I can easily see us amplifying the number of contractual relationships we have for multi-year large volume contracts, increasing 2 or 3-fold over the course of the current fiscal year.
Okay. Secondly, just thinking about the attacking the supply chain for, let's say, FEMA cotton or some other textile, maybe even that's probably relate to plastics and metals as well. I guess one of the questions we have is who's going to pay for it, and why would somebody up the chain pay for something that was they thought should be paid for down the chain? Is that an issue, or am I thinking about this incorrectly?
You cut in and out a little, but I think I got the bulk of your question, and from what I heard, it's a very good question. And that is what benefits us and our customers, we believe, is that by marking as high up in the supply chain as we possibly can, so that we can benefit every element of the supply chain, and so that we can secure every node in that supply chain. However, our business experience suggests that it's most successful when there is a retailer at the far end, opposite end of the supply chain, pulling the technology through with a strong motivation. And that motivation either being that they want an ethical supply chain, they want to know where their product comes from, they want to ensure that they're selling to the consumer what the consumer thinks they're buying. And when that motivation is strong enough, and when we can go high enough back into the supply chain, that's the perfect system for us. And that has happened for us a couple of times, and we're looking forward to replicating that model as often as we can when we have the chance to address an entire industry really by working within that vertical.
Okay, thank you. I guess just trying to get a sense of 2016. You said that you think you have a baseline, which is this year. There's going to be some increment, and you said it was going to be strong. What does that mean? Would you double, triple, quadruple sales? What's your thinking will be at the end of this fiscal year?
Yeah, I'm really not in the position to provide that kind of guidance. I wouldn't dare now really have the basis to predict that. If I could, I would. It would be beneficial to you, to me, and to all of our shareholders, but we're not quite yet there.
And our next question comes from Grant Zeng of Zacks Investment Research. Please go ahead.
Hi guys, thanks for taking my question. First, congratulations on the strong quarter. Actually, my question has been answered. It's related to the pharmaceutical industry. Actually, I would like to know some more details about the time frame. And I know you guys have been making every effort to tap this industry. So would you please let us know a little bit more about when this effort can translate to meaningful revenue?
Yes, good question, and it's one we watch very carefully. So the question dealt with what is our expected time to the pharma market, and what kind of customer might we expect, and what kind of reward? Well, we've worked hard in anticipation, both in trials, which have gone very well, and in our own programmatic development, and working with the regulatory lawyers. And our position is that we are fully in compliance with the FDA now. So there is no regulatory barrier to our being used in the packaging or actually in or on the drug product itself. And we are one of the only companies who can actually protect the unit dose in addition to the packaging. And that can become very important, for example, in markets like Africa, where it's not uncommon for a patient to go to their provider to get a day's dose, one dose at a time. So being able to authenticate doses can be very, very important. So we think we've gotten the bulk of the barriers out of the way. Now it's a business process. And the business process is having a high enough visibility, making sure that we have the right thought leaders, which is why we've constructed our strategic advisory board to help guide us, to help connect us to the other leadership within the industry. And we will begin to show at all the trade shows. We are, in fact, in this coming month, about to participate in a trade show in Japan of the major pharmaceutical industry. So we feel this is the year for us to be entering pharma, and how long it will be for the first sales cycle to be complete is at the moment a matter of speculation.
Thanks. That's good. Yeah, absolutely.
And our next question comes from Aaron Martin of AIGH Investment Partners. Please go ahead.
Hi, this is Oren Hirschman for Aaron. I just wanted to go back and confirm. You are still saying there's going to be growth this year. You're just not sure as to what level of growth. Is that a fair way to state it?
We're very bullish about the performance of the company, and we think a large portion of our business is in fact the baseline for that business that is where we're starting sales from this year. So we are expecting growth.
Okay. Can you just go through the seasonality? I mean, most of us are familiar with it, but again, the seasonality in the cotton space. And can you also, somebody started with this question, let's talk about the prospects for additional growth within cotton, and especially growth, do you think you'll have, even forget about growth from it, a massive growth, but just to get another textile this year?
Sure. The cotton grows in the United States predominantly in a few high productivity states. And typically the harvesting period for those states begins from September and can run as long as October, November. The ginning season, which is where the cotton is cleaned and ultimately baled and tested for purity and certified and qualified and then stored, runs from about October until January. It's during ginning that we DNA mark, so that the seasonality comes from a requirement for DNA that typically begins around July and runs through December, or around December, I guess. And that's the reason for the seasonality. Of course, you don't have that seasonality with synthetic fibers, and we have a very strong interest in synthetic fibers. We feel that market could be just as large and in some ways more predictable, because the ginning doesn't occur when you're exposed to the weather. The processing of those fibers is under very controlled conditions. So we're very optimistic about entering those markets as well. We are receiving attention from lots of different brands and retailers. And so based on that attention, our hope is that it translates into revenue in subsequent quarters. But as I explained with a prior question, we're not the team that does the selling. We are the provider of DNA to Louis Dreyfus, and we don't cause those contracts to be let. It's the other way around. So what we do, however, is bring attention to the issue and to the fact that we have the solution, and we aid the sales process in that regard.
And our next question comes from Ben Revisita of Ascending Capital. Please go ahead.
Hi, Jim. Thank you for taking the question.
My pleasure.
Sure. Regarding the cotton kind of pre-sales that were done in Q4, so the sales in Q1 were close to zero, it looks like. Any of these pre-sales will affect sales in 2016, meaning everything you sold in 2015 was for marketing?
Forgive me, Ben, but your voice was not too clear, and so no one around the table here could quite understand the question. Could you try again, please? I apologize.
Okay, sure. The sales in Q4 of cotton, it looks like those are kind of pre-sales because there weren't many sales in Q1 with the with extended payment terms. So my question is, the cotton that's going to be marked in 2016, is any of that going to be from sales made in 2015? Are they going to be able to hold that in storage and use that in 2016 at all?
There's a very, very small chance of marking inventory from the year before. It's much more likely because that inventory has already been ginned. And cotton suppliers don't like to gin cotton more than one time in order to get the DNA mark. So instead, it's much more likely that our feedstock for DNA marking would come from the current year. And that is the reason, as I explained a moment ago, for the seasonality, because it happens from September to December.
Okay, great. One other question regarding Borealis and Tecmer. Last year at this time, there was only about 150,000 in cotton sales, and that kind of exploded throughout the year to 3.6 million. Is that kind of growth trajectory possible this year in 2016 with commercialization of Borealis and Techmer partners?
I wouldn't want to comment in such a way that my comment is implied as a promise, but those are huge industries, in some aspects larger than cotton, more controllable in some ways, and their end products are just as subject to counterfeiting. So I would say it's an opportunity at least as equal to cotton.
And ladies and gentlemen, this concludes our question and answer session. I would like to thank you for attending today's presentation. You may now disconnect.